Ladies and gentlemen, good day and welcome to the JTL Industries Ltd Q1FY27 conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Sneha Talreja from Nuvama. Thank you, and over to you.
Thank you, Ananya. Good afternoon, everyone. I warmly welcome everybody to JTL Industries Q1 FY27 earnings concall. On the management side, today we have with us Mr. Pranav Singla, Executive Director, Mr. Dhruv Singla, Executive Director, and Mr. Naveen Laroia, CFO. Without taking any more time, I will now hand over the call to Mr. Naveen. Sir, over to you, sir, for your opening remarks.
Good afternoon, everybody. This is Naveen Laroia, CFO of JTL Industries Ltd. I thank you all for joining the earnings conference call of JTL Industries Ltd to discuss the performance for Q1 of financial year 27. We appreciate your continued support and interest in our company. The company achieved its highest ever quarterly revenue from operations and EBITDA in Q1 FY27. Revenue from operations reached rupees 722 crores, while EBITDA was rupees 59 crores, with a margin of 8.1%. Profit after tax for the quarter was rupees 35 crores, with a margin of 4.9%. PAT of rupees 35 crores is after an 2.8 crores of additional non-cash depreciation arising from the March 2026 assets revaluation at JTL Defence Limited, erstwhile RCI Industries and Technologies Limited. The company has reported a sales volume of 118,513 metric tons during Q1 FY27, reflecting 17.8% year-on-year growth. Operational revenue per ton increased to rupees 6,882, while operational EBITDA per ton without other income improved to rupees 4,954 per metric ton, supported by an improved product mix and continued focus on operational efficiencies. During the quarter, the company continued to strengthen its presence across key end-user industries through its value-added product portfolio. DFT structural steel pipes continued to gain acceptance across the dealer network and industrial applications, supported by improved production and capacity utilization at the Mangaon facility. The quarter also marked progress in strengthening the company's presence in the water infrastructure segment with the receipt of rupees 27 crores order for the supply of galvanized iron pipes for water supply and distribution projects in Himachal Pradesh. This order reinforces the company's capability to cater to institutional infrastructure requirements and further strengthens its position in the domestic market. The company continues to focus on improving operational efficiencies, expanding the contribution from value-added products, and strengthening its presence across domestic and export markets. Supported by its integrated manufacturing platform and diversified portfolio, JTL Industries remains focused on creating long-term value through disciplined execution and sustained operational performance. With this, I would now request the moderator to open the floor for questions and answers. Thank you.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Lokesh Kashikar from Smith's Institutional Equities. Please go ahead.
Yeah, hi. Congratulations, sir, on the very good set of numbers during the quarter. Couple of things, couple of questions from my side. starting with EBITDA per ton. This quarter, the EBITDA per ton was closer to around 5,000, and it was elevated and better than guidance. So just wanted to confirm, is there any one-off like inventory carrying gains, or it is just a function of elevated mix? So that's the first question from my side.
Hi, Rakesh. Thanks for the question. So, if you look at the consolidated EBITDA per ton, so this includes the consolidation of JTL Defense as well. So JTL Defense contributed close to 200 rupees addition in the EBITDA per ton. Barring that, the EBITDA per ton was at around 4750 level, which was again a growth as well. And as we mentioned that this year's target for us is to maintain the EBITDA around 4,500 rupees. So we are well intact to get the guidance in reach. And the only composition added of was JTL Defense.
And so what would be the guidance? It would be closer to, on the consolidated level, it would be around 4,500 to 5,000, or how it would be?
So given the normalized situation of HRC right now, so we are very confident that the 4750 EBITDA per ton in JTL Steel Tubes and Pipe segment is something that we can achieve in the coming quarters as well. There is an upward trajectory that we foresee ahead as well. So we are very confident that console level 5,000 rupees something that we'll definitely achieve in the coming quarters as well.
Sure. And so secondly, what was the EBIT, what was the value added mix during the quarter? And what was the export component to the overall mix?
So the value added composition was again close to 35%, what we've been doing in the past as well. There was slightly dip in the exports this time. That was majorly because of the container shortages happening all over. So our exports were at 5% this quarter. Going ahead, we have a healthy order book of exports, actually one of the biggest order books of exports right now we have in our hands. But because of the whole container situation, there has been some lag in dispatches. But going ahead, we'll cover up everything.
Sure. And sir, last one, just checking on the volume growth guidance. Earlier, you have guided for around 30% volume growth for FY27. So that remains intact?
Definitely, that remains intact. So if I past second, so my H2 is usually stronger than H1. Given that I do similar kind of volumes, actually higher kind of volumes than what you done in Q1, and if you do a 20% growth over that, so we will anyways cross the 30% guidance as well. But still, 30% is something that we'll definitely achieve. But our aim will be to deliver more than that as well.
Sure. That's it from my side. Thank you.
Thank you very much. The next question is from the line of Souvik from Nuvama. Please go ahead.
Hello. Hi, management. Hi, I just wanted to know a little bit about the Mangaon facility, and are we in track for its completion by H1? And how much has been the utilization in the first quarter for the same facility?
Hi, Souvik. So the utilization of the Mangaon facility is about 42% right now. Going ahead, we are very confident to achieve the desired capacity of addition of close to 1 million tons by end of H1. And right now, overall level, like the company level, we are operating at 50% utilization levels. And by year end, this level should be close to 65%. So as I mentioned that you should see a better H2. So this will be because majorly led by the utilization increase at Mangaon facility. Over there, we are doing close to 7 to 10,000 tons of DFT right now, which has a huge space to grow, in fact, double from here as well. So once we do that, once we start to achieve that, our utilization level from the plant itself will touch 60%. And the utilization will increase, and so will the margins coming from the Mangaon facility.
Thank you so much. Pranav, I just also wanted to touch upon the export bit. I think you mentioned that we have the highest ever export order book currently. Could you speak more in terms of what has happened in exports, and give us some more flavor on it?
Yeah. Hi, Shravan. Dhruv this side. So, on the export side, due to the issues in Hormuz and the lack in availability of containers and transportation thereof, the first quarter was hit a little bit in that aspect. But having been said that, in the recent times, we've been awarded different affiliations like ACRS, and we've also started some exports to the Americas. So we've had good interest from there, and currently we have a good order book for exports to take care of that. If the situation of logistics improve, we shall cover up this lack in first quarter, the second one. And to quantify, will be the earlier mentioned target of 10% of total sales to exports is something that we'll target for the coming quarters as well. The some lag in 5% will be accounted for in the coming quarters.
Understood. Could you also give me the CapEx outflow that you have planned for FY27 and 28?
So for this year, the CapEx outflow is close to 100 crores, and this will be completing our entire CapEx left over. After that, there will be only maintenance CapEx of 30-40 crores every year at max happening. But the remaining 100 crores of CapEx will complete our entire journey to 2 million tons.
Okay. Okay. Thank you. Thank you so much.
Thank you. The next question is from the line of Jatin from Nuvama. Before that, ladies and gentlemen, it's a reminder for all participants, please press star and 1 to ask a question. Participants who wish to ask a question, please press star and 1. Jatin from Nuvama, please go ahead.
Hi, Dean. Good morning. So I've got two questions. First is on JTL Defense. So coming to guidance, are we maintaining our guidance at 200 crores of top line and 6,000 tons? And I believe EBITDA margin guidance was at about 10 to 15%. What's this at?
Sorry, can you please repeat the number that you said, please, again once? Hello?
Ladies and gentlemen, we have lost the line of the last participant. It's a reminder for all participants, please press star and 1 to ask a question. The next question is from the line of Nishita Shanklesh from Sapphire Capital. Please go ahead.
Hello, am I audible?
Yes.
Yeah. So, currently our capacity is 1 million ton, and you mentioned that like after our total capex of 100 crores is done, we'll reach the capacity of 2 million tons. So, how fast can we ramp up this capacity, and is it going to come in phases?
Yes, so the capacity is going to come in phases. The ramp, so if you talk about the full million tons, out of this 7 lakh tons or close to 7 lakh tons shall be commissioned by H1 end, and the remaining 3 lakh tons will be commissioned by next year around this time, and that will be of API pipes that were already announced before. And if you talk about the ramp up will take some time, although you will see some contribution of the new capacity happening every quarter. But the full utilization levels will be met by FY29. And on that whole capacity, we should achieve a plus of the 50 to 55% utilization levels in FY29. So if you talk about...
Okay, so in FY29, we can reach 60% utilization level.
50 to 60% utilization levels. It's too early for us to comment right now because it depends how, in which quarter the full CapEx is completed for the remaining last 3 lakh tons of API pipes. So that will be a key thing to note and tell that when exactly can we achieve the utilizations accordingly.
Right. So the total capacity, like we can assume, will be commissioned in FY28, and by FY29 we can reach the utilization level of 50-60%.
50
Is that
50 to
correct?
60%. Yes, 50 to 60% in FY29.
Right. Okay,
Yes.
understood. And like, what will be the at peak utilization? I'm assuming the peak utilization to be of 75-80%. What is the total revenue that we can expect?
The peak utilization that we can achieve is close to 70%. So that is something that we target in FY29 itself as well, as I mentioned. But it is very subjective how fast the CapEx is completed of the last leg. So 70% is something that we reach at peak. So that can happen as soon as FY29 as well, and that can happen as late as FY30.
Okay, and the revenue potential at peak utilization will be?
Sorry?
The revenue potential at peak utilization.
So right now, the realization per ton is close to 6,000 rupees. As we are
Right.
pouring into valuable products going ahead, we can expect the realization to increase from 6,000 rupees to 65,000-66,000 rupees going ahead. So around on the peak levels of 70%, if you do, so about 1.4 million tons into 65,000 rupees is something that could be the peak revenue
Okay.
on the current CapEx cycle.
Okay, understood. Thank you so much.
Welcome.
Thank you. Ladies and gentlemen, reminder for all participants, please press star and 1 to ask a question. Participants, to ask a question, please press star and 1. The next question is from the line of Jatin from Nuvama. Please go ahead.
Hi. Apologies for earlier. Continuing on the question earlier. My question was on JTL Defense. So, the guidance I believe we had was top line of 200 crores and a volume of 6,000 tons, right? And EBITDA margins at 10 to 15%. Are we maintaining that?
Hi, Jatin. So this guidance is not for this. The volume guidance is not for this year, although the top line is something that we're still trying to achieve, and we'll be touching close to 150 crores of top line on that. Right now, given the run rate of Q1, we were at about 100 metric tons a month, and we've already reached a run rate of 120 metric tons a month in this quarter. In this first month, we did close to 120 metric tons of sales in first month of this quarter. So we are expecting by exit quarter, we'll be touching 500 tons, close to 500 tons of sales in defense by that time. And the guidance on the margin over there, so Q4 was a exceptional quarter in that because of led by inventory gains, in which we did 20% EBITDA margins. In Q1, we had about 12% EBITDA margin in defense. Going ahead, it's too soon again to maintain the exact 15% margin going ahead, but the long-term margin is 15%. But for now, it can be wavering around because it's a new setup for us, a new industry for us. So a lot of things are being tested over there, and a lot of things are being planned differently as well. So, but 10 to 15% is something that you will achieve in the long-term proposition.
Understood. The second question is, coming to growth, I mean, will you be able to quantify, I mean, how much of the volume growth has come up from the new capacities that are ramping up, and how much has it come from the market share gains that you've been getting from filling the channel inventory? If you can just give a breakup of it.
So as I mentioned that earlier, we were doing close to 10,000 tons of DFT a quarter. From that, we have almost doubled ourselves, and we are close to 20 to 25,000 tons of DFT a quarter right now. So there is new capacity which is playing the role as well, and also we are gaining share in the segment as well because we are getting empaneled in a lot of places in Maharashtra itself, and in the export market as well. There is a good demand for DFT sections. We have opened our borders to USA as well, and Mexico as well, and Canada as well. So all these places, DFT is being exported as well. So there's a bit of market share gaining happening, and there's a mix of new areas opening as well.
Okay, cool. Thank you. That's all from my end.
Thank you. Reminder for all participants, please press star and 1 to ask a question. Participants who wish to ask a question may press star and 1. The next question is from the line of Devang from Abacus Asset Manager Private Limited. Please go ahead.
Hello, sir. Good afternoon. Congrats on a good set of numbers. My question is on the demand side. How is the demand panning out for various sectors at the moment? How do you see it going forward?
Hi. You said demand panning out from, I could not hear the last part, sorry.
Yeah, how is the demand panning out in terms of various sectors, your user industries? I was asking.
Yeah. So see, there is a good demand. Firstly, there is a difference between the primary and the secondary product. So there is a good demand in the secondary product at the moment. It's say record-breaking demand in the secondary product. So that is one aspect of it because the difference is there. And the primary product wherein we have gained a market share in DFT, we have gained a market share in specialized products from low dia, high thickness, replacement of seamless pipes, making some thicknesses as replacement of seamless pipes. So these areas we are actively gaining ground on with direct supply to OEMs also, and also then the dealer network also. So these products are something not everybody is doing, and only a few handful of us are doing in India. Earlier it was imported a lot. So these are the markets that we are gaining active share in. And we have gotten a lot of good response in this area. With time, we've also researched that how we are able to deploy these products into areas such as replacement of say seamless pipes in hydraulic segments and in automotive segments wherein the price sensitivity has come, and also they need higher grade materials which perform better. So we've been able to penetrate in that right now.
Right. So basically you are entering into input substitution in new areas basically. Is that understanding correct?
Yes. And these are all value-added products. So earlier value-added products was only galvanized pipe, but these areas are now value-added products. In the black form.
So value addition proportion, which is 35% currently, how can it pan out next couple of years? Or what percentage it can go to? Because we have capacity coming in the Concall which are value addition.
No, sorry. Come again.
I was asking this 35% value addition. What we are 35% the product mix is value added. So what it can go in in the medium term, say couple of years down the line.
So our target is when we are getting our all the CRM processes also running this the 1 million ton to 2 million tons. That is all value added product. So our target in the coming future is minimum 50 to 60% of our product will be value added.
Right. And how is July pan out in terms of volumes? Any color on that?
So July for us was again an all-time high month, and going ahead with the run rate as well, we'll be able to achieve an all-time high quarter as well, given the situation. So things are shaping as well as Dhruv mentioned that there is a good gap in primary and secondary right now as well. So because of the whole situation, the secondary demand is also excellent as well. And because of this situation, we'll be probably able to live another all-time high quarter.
Good to hear. And lastly, I missed the capex number. Can you please leave it again for F27 and F28?
For FY27, the capex figures will be close to 100 crore rupees, and that will complete our capex. And in the next financial year, the capex will be a maintenance capex of 30 to 40 crore rupees at max.
Got it.
This is only the capex of industries. There can be some capex happening in defense as well, so that is extra over that. But that capex is anyway not any sizable capex. It will be close to 15-20 crores going ahead as well.
Got it. Thank you for the answers and all the best.
Thank you, Devang.
Thank you. Reminder for all participants, please press star and 1 to ask a question. Participants who wish to ask a question, please press star and 1. The next question is from the line of Sneha Talreja from Nuvama Wealth Management. Please go ahead.
Hi, team. Thanks a lot for the opportunity. Just a couple of questions from my end. While you answered on demand, could you tell us how is government CapEx at this point of time? Are we getting any orders from Nal Se Jal? We've earlier been one of the beneficiaries, or are we seeing CapEx outlay from that particular scheme happening? That's the first one.
Hi, Sneha. There has been a little increase in the government CapEx, not the situation what we saw 2 years back, but now there has been improvement, and we've got some orders as well. But we, as a company, have made a point of having more sales to our dealer network and exports. That's what our target audience right now. The government is very seasonal demand, so we are not relying on government sector anymore. Earlier, our Derabasi plant, which is a Punjab plant, we had dedicated that plant towards government earlier. But now, we shifted that mode, and from there we are keeping the dealer market as well. And it's just that when there are good government orders of particular size coming in favorable to us, that time we open up to these orders. So that's why if you saw as well, last year, government contribution was not even 5%, which was over 25% earlier. So we've been trying to intentionally cut off our government base as well and focus more towards dealer and export market.
Understood. Any dealer distribution network increase that you want to give us?
The current dealer network is sufficing with the products. The DFT product, which has been a volume pusher, is actually going to the departments like MMRDA and airport authorities. So these are the places where the product is going and not to dealers. Earlier, in the first quarters when we started DFT, the product was being moved to all these places through dealers. But now, as we're empaneled most of the places ourselves, so it is a direct sales that is happening over there.
Understood. And lastly, what I wanted to understand was how was the primary and the secondary spread during quarter one, and what is it now, and how is it benefiting us at this point?
The difference between the primary and the secondary has remained in the say range bound of about 8 to 12 rupees in the last quarter, with 7 to 8 rupees being the lowest end of it, and 11 to 12 rupees being the latter end of it. So when this kind of difference, which was normally earlier around 4 to 5 rupees per kg, when this kind of difference rises, then the demand in the secondary product increases. And currently, our capacity is being about 45 to 50% in the secondary market. We were able to capitalize on this demand in this quarter. So right now also, the difference is similarly, and there is bumper demand in the secondary market. So yes, till the time this difference remains, we shall see the demand pattern being in similar manner.
Got that. Thanks a lot, team. All the best.
Thank you. The next question is from the line of Sandhya from Wealth Advisory. Please go ahead.
Hello. So am I audible, sir?
Yes, Sandhya, you're audible.
Okay. So first of all, sir, congratulations on this strong quarter. So I had a couple of questions to ask. So can you just provide an update on exports and which geographies are seeing the strongest traction, particularly after receiving ACRS certification?
So you were saying, so ACRS certification is majorly for Australia, and the traction from the certificate is majorly help us gaining market share in Australia itself. And more than that, we have been opening our borders to US and Mexico as well. So that has been a market where we've been supplying heavily as well in the last quarter.
Okay. And my second question is on order book related. So can you just highlight how much order book we have and what is the timeline of execution of it?
So if you talk about the export order book, we have plus for the 75 crores of order book of exports right now. And if you talk about the normal order book for the company, a quarter order book is something that usually moves around and we work with. So that's the kind of order we still have right now. So That's about the order book situation for now.
Can you just quantify it?
So a lakh tons of order book is something that's always it's a moving market in which.
Yeah, ma'am, it's a dealer network market. So, when we say that we are the dealer network contributes for 50 to 60% of our entire sales, the order book per dealer is not on a daily, it's on a daily basis rather than on a fixed day basis. So, we tend to sell to our dealers on a daily basis. That's how it is. But if you quantify the export orders and all, that we can quantify because that is a longer delivery period order. In the local market, we have to deliver between 7 to 10 days, and that is how our order book keeps on changing on a daily basis.
Okay. And how should the investor think about the working capital and cash conversion as sales volumes continue to increase?
The working capital cycle has been improving of the company. So we were about 90 days earlier, which has come down this quarter. And it's about 75 days right now at this quarter. And going ahead, we are opting for dealer financing as well, which will further bring down our working capital. So working capital cycle. So you should see improvement in the working capital cycle happening in the coming quarters. As I mentioned again, our working capital cycle was majorly stretched because of a government base earlier and the payments being due over there for a long while. But now we have changed our mode and focused more towards exports and dealer network, wherein dealer network the payments are only about 7 to 8 days. So the working capital cycle will improve drastically to 35-40 days levels in the coming years. By FY28 end, we are targeting a working capital cycle of 35 to 40 days.
Okay, sir. Thank you so much. That's it from me.
Thank you. Reminder for all participants, please press star and 1 to ask a question. To ask a question, please press star and 1. The next question is from the line of Nishita Shankresha from Sapphire Capital. Please go ahead.
Yeah, thank you for the follow-up question. I just wanted some clarification. You mentioned that by the exit quarter, we will reach close to 500 ton of sales in JTL Defense. So does that mean that by Q4FY27, we'll reach to the 500 ton of sales?
Yes, that's right. That's right. So by the exit quarter, that's correct. We should.
Right. So the 500 ton sale is the quarterly sale number or on an annual basis?
No. The 500 tons would be something that we'll be doing in a month in JTL Defense. So right now we are doing close to 120 metric tons, as I mentioned, which was the highest for us in this quarter, this month, in the first month. So going ahead by fourth quarter, we are targeting that we will achieve 500 metric tons per month of sales of JTL Defense products.
Okay. Understood. Yeah. Thank you so much.
Thank you. The next question is from the line of Dhananjay Bagrodia from Alchemy Capital Management. Please go ahead.
Hi, Dhruv. I just wanted to ask you guys, for JTL Defense, how much capex are we looking to do, and what is the strategy along those lines for JTL Defense?
Hi, Dhananjay. Hope you're doing well. So the capex over there is not big capex for now. We are just entering into coin segment and bullet shell segment. So for that, we had a few machines which require renovations and few machines which we need to order new as well, because the machines required in the mint factory coin segment is something that needs to be updated quite frequently as well. And the same goes for bullet shell. So the capex outflow for that kind of addition in this year would be not more than 15 crores. And a similar kind of capex would be expected in that company in the next year as well. So this will not change the capacity of the company. This will change the product placement of the company. For example, like for now, the capacity over there is close to 12,000 tons of 1,000 tons that we can do per month. So going ahead, and when I talk about 1,000 tons a month, so this is the hot pit capacity. So going ahead, this product, which we are placing to automobile segment right now and dealer segment right now, which is the copper foils and sheets, these will be converted to bullet shells and segments, and also towards mint factory, which will further provide value addition to the company and bump up with the margins. So for that, 15 crores of capex is something that you can expect this year, and similar amount in next year as well.
Very good. And just to have a little broad base, let's say 2-3 years down the line, defense, we would predominantly still be a shell company. Any revenue targets or anything in the mind? Like, just like broad base, any idea what it could be, how large it could be, what are we thinking?
So, it's gonna be a mix of everything. I won't say that it's entirely gonna be defense company, only be bullet shells segment, because the bullet shell segment, if you talk about the cup itself, it's a 4-gram product. So it's not a thing that, even if I don't volumes as well, I can achieve quantity, what's the entire capacity of the plant is. So around 25-30%, which is close to 200 tons, is something that we can focus, will go towards mint factory, which is towards coins and segments, and 30 to 35%, which is close to 350 tons of material, will go towards bullet shells and casings. And the remaining product, which is close to 350 tons, will be going towards the current dealer and automobile market. So, for example, we have Minda Corp, who is one of the biggest procurers for copper foils right now. So there are a lot of similar automobile companies we are targeting, in which we are getting healthy margins as well. So it's safe to say that 30% will be automobiles and dealer network, 35% will be defense, and the remaining will be mint factories.
Understood. Thank you, Pranav. This was really, really helpful. And
thank you, Nandini. Thanks, Nandini.
Thank you. Reminder for all participants, please press star and 1 to ask a question. Participants who wish to ask a question, please press star and 1. As there are no questions, the last question has been completed. I now hand the conference over to the management for closing remarks. Over to you, sir.
Thank you everyone for joining our earnings call. I hope we were able to give you the answers to your queries. If you have any further questions or would like to know more about the company, please reach out to our investor relations team. Thank you.
On behalf of Nuvama and JTL Industries, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.